Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really pleased to have with me once again Dr. Keith Weiner. He's been with me a couple of times in the past. For those of you who may not be familiar with him, he is the founder of Monetary Metals. That's the leading authority in the areas of gold, money, and credit, and has made important contributions to the development of trading techniques founded upon the analysis of bid-ask spreads. He is the founder of Diamondware. That's a software company he sold to Nortel in 2008. And he currently serves as president of the Gold Standard Institute, USA. He earned his PhD from the New Austrian School of Economics. Welcome, Keith, and thanks for joining me again.
Thanks for having me again.
Really good to have you with us. And, I should tell our listeners right away, because there's so much good information there. It's monetary-metals.com, monetary-metals.com, to catch up on all of, I don't know if all of, but much of what Keith does. There's a lot of products that are available that I hope we'll have a moment or two to talk about as well today before this segment ends. Keith, I'd like to focus today on an article that you wrote on July 2nd titled Gold-Backed State Bonds, an Idea Whose Time Has Come. In general, what are the factors that need to take place for a new idea not only to emerge, but to be embraced and enacted in a society?
So that's a really interesting question. I think it was Cato Institute put out a book called Bootleggers and Baptists that talked about when you have a evil regime or evil institution such as prohibition, or for that matter, Jim Crow laws, that you have two groups that have this unholy alliance, and one is the bootleggers. Those are the people who break the law, and of course breaking the law has been made highly profitable because the law makes it illegal for people to do business in the ordinary way, so the criminal gangs can get rich. And then you have the Baptists, so-called, in this analogy, the moralizers, who give cover to what would otherwise be pretty obvious as a bad thing. Why do we make it illegal for people to put alcohol into their bodies? Or why do we make it illegal for restaurants to serve people regardless of their skin color? Mm-hmm. Well, that's because a lot of people feel or felt at the time that those were the morally right things to do. And so I think to change it, then you kind of have to reverse that. You have to show that there is a financial benefit to changing the regime. The current example of that, I think, overwhelmingly clear now is marijuana. States are reversing it. And what had been a blue issue, a Democrat issue, who wants to smoke weed is generally on the left side of the aisle, is now rapidly becoming a right issue because there's a lot of business to be done and a lot of money to be made and a lot of tax revenues to the states that are legalizing pot. And you have to also make the moral case. You have to argue that changing the regime, the old regime is bad and the new one is good. And that takes, the first step as a public intellectual to put something out there into the public conversation, and then for it to get some traction. And that is the path, that's the game plan that I see for remonetizing gold.
Yeah, you mentioned in your article, you quoted Victor Hugo, in which you quoted him in English. It's literally translated, an invasion of armies can be resisted, an invasion of ideas cannot be resisted. So with regard to this issue of gold, we have a lot of good ideas, but good ideas can sit on the back burner for a long time. There are a lot of bad ideas that can really can also persist for a long, long time. And we'd had what I think is a really bad idea, Keynesian economics, government intervention, interference in the monetary system. But specifically, what are the forces in play right now that may be changing this notion that Keynesian economics is the cure-all for all our problems?
So I think, just to go back to Victor Hugo for a moment, it's interesting that the common translation, and this is the one that I heard, and so when I went to Google search it, this is what I thought I was looking for, and I thought it would be somebody like Gandhi who said it. The common translation from the French to the English is nothing can stop an idea whose time has come.
Uh-huh.
And I think that was the sense and the context in which he said that. That, you can have a really crappy idea. The French had absolute monarchy, what they called ancien regime, for hundreds of years. I don't know if it was 400 or 500 years before the French Revolution. It was a long time. And then before that, they had various other flavors of monarchy. And so what had happened by 1789 was the time had come. And so the question is, has the time come now? And if so, why? And I think the answer is yes. I think we're on the early edge of it. But I think the major force that I would identify is they've waged a war on interest, and they've won. I mean, yeah, I know the interest rates come back up a bit, although not that anybody with a bank account would see it. The banks aren't paying interest. The Treasury bond is. It's come up a bit, but I think that's just one correction along the way. My challenge to anybody who says interest rates have turned around and are now rising is, can you identify what has caused them to fall for 35 or 36 or 37 years and why that force has suddenly changed? And I read a lot about it, and I don't think it has. So with a drop in interest rates, people can't earn interest anymore. And so that means people that are working for wages cannot. It's impossible now to achieve their retirement goals. When I'm just old enough, when I started my career, the standard advice was set aside 10% of your salary, put it in the bank, like in 3 months or 6 months CDs. And by the time you turn 65 years old, you have 1.5 million, which is enough to live on. Well, 85 or 90% of that 1.5 million was not the set aside from your salary. It was a compounded interest. And so today you can't get compounded interest. And so you can't attain your retirement goals unless you speculate on some bubble. And I think there's some awareness that whole generations can't get rich speculating on whatever the latest bubble is. Sure, if you're nimble and you're smart and you're clever, you can get in early and get out early. But the average, the market, cannot. And so, and then the same thing if you attain retirement, doubly, you shouldn't be speculating on bubbles. How are you supposed to live in retirement with no interest? And so, what people do is they're forced to liquidate their capital. And so we have a monetary system that's forced us in liquidation mode. And that is causing all manner of problems, especially amongst workers who are marginalized by this. And I know the employment numbers are up right now, but I think the trend, the very long-term trend is clear. Workforce participation rate is declining. Record numbers of people not counted in the workforce, 96 million, I think. And so I think that's what causes people to question, is there something wrong? Mm-hmm. And I think we're at that point.
Yeah, people are starting to feel it, and they know something's wrong. They may not be able to put their fingers on it, but they certainly can see that they're not keeping up. You're not getting any interest. That's an obvious one to most people, I believe. Now, of course, your company provides some yield for a currency that over time doesn't lose its value. That's gold. Can you talk just a little bit about what kind of yields can people get if they own gold? They can invest it through your firm, and then you. And what kind of yields can the investor get who owns gold that might want to get some yield on their gold? Because that's one of the big excuses that I've always heard from the mainstream is, what do you want to own gold for? You can't get any yield. So what can people? First of all, how much gold do people need to have to invest with your firm with Monetary Metals, and what kind of yield can they get? Can say a retail person like myself, what can I get for my X amount of ounces of gold?
So the minimum account size is 10 ounces, mm-hmm. which at today's prices is a little over $12,000. Mm-hmm. We go deal by deal, so we're not a fiduciary in that you give us your metal to invest on your behalf.
Sure.
But rather more like a market maker where we present different deals, different opportunities. We've had deals in the range of 2% to 3.75%. And that depends on the nature of the company who's using the gold and the risks and the flows involved in that. Okay,
and each deal is different. So can you talk to the risks that are involved? And I think that you had some sort of insurance, I believe, on one of your deals recently that sort of cut back the risk. Maybe the yield wasn't quite as high.
Yeah, so obviously with lower risk comes lower yield. By the way, to put this in perspective, I gave a talk recently at the Harvard Club in New York. Mm-hmm. So hanging on the wall amongst all the memorabilia was a gold bond issued in 1905 by a railroad, had a 92-year maturity, matured in 1998.
Wow.
The interest rate was 3.5% for 92-year duration risk.
Wow.
And so that sort of benchmarks this a little bit. In our case, it is not lending; it is leasing, and think of like a tangible piece of property, and that's how gold is treated under our laws today, which is kind of the irony of it. So if you have an old phone and then your kid's friend needs a phone, you could say, okay, I'll lease you this, pay me $10 a month, keep the phone as long as you want, and so you get a payment. In our case, the payment is in gold, but the principle is the same. You still remain the owner of the gold.
Okay.
That's really important because the company that's using it does not get title to it, does not go on their balance sheet. If they declare bankruptcy, it does not go to their creditors. So obviously there are risks. There's no such thing as a yield without risk. But the risks are obviously it could be stolen. It could be stolen by an insider. Other things that could happen when dealing with physical inventories moving around. And so we require the lessee to have insurance, of course. And recently we did a press release that we added a major global carrier that doesn't want their name to be used in public, like on the internet, mentions. But it's a London-based leading global carrier of insurance that adds a second layer of insurance at the monetary metals level that basically pays out if the lessee's insurance doesn't pay for some reason. And the typical case for that would be if an insider, the lessee, steals or embezzles the gold. Comes in the middle of the night, unlocks the safe, takes the gold, gets on an airplane to Brazil. The lessee's insurance policy wouldn't pay out in a case like that typically, but our policy would. And so that does reduce the risk to the investors pretty significantly, we believe.
And so what kind of a yield would the investor get on that deal, on that particular deal?
So in the most recent deal, it's 24-karat gold that's in a Brinks account titled to monetary metals. It has that insurance as well, and the investors on that deal are getting 2%. Okay.
Well, it's 2% with very low risks. It beats almost anything you get. And the duration of the lease?
1 year.
1 year. Okay. All right. Well, that's it. And you're going to get back your gold, which has not lost its value, at least over time. So,
so to make this clear, if you put 100 ounces in and the interest rate is 2%, which it is in that deal, you get back 102 ounces of gold at the end of the year.
Sure. Yeah. Okay. All right. Well, that takes sort of from a retail perspective. But now, why? I'm interested in noting, I know that the Nevada Assemblyman Jim Merchant announced the Nevada Gold and Silver Enabling Act, and I believe you've been involved as an advisor, perhaps, to this gentleman or to the Nevada Assembly, to the legislature there. What would this bill do? I understand it's been introduced, not yet passed in Nevada, but what would this bill do? It would allow, as I understand it, would allow Nevada to issue gold-backed bonds. Why would they want to do that?
So there's a whole bunch of benefits that I would call ancillary, but two principal benefits. One is it removes the currency risk. So right now, there's about 160 tons of gold mined in the state of Nevada every year. The state gets a 5% royalty tax on that, which is about 8 tons, which is about $320 million. So that gold is, of course, sold, and the state gets the 320, and they have $320 million worth of dollar payable expenses that obviously match that. The price of gold drops 10%. And right now, here we are on the way to that happening at the moment.
Yeah.
Then Nevada has revenue goes down by $32 million.
Right, right.
But the expenses don't. So suddenly they have a surprise budget deficit. Now, politicians don't necessarily dislike budget deficits, but nobody likes an unpleasant surprise. And so if they replace some paper bonds with gold bonds and change some of their dollar payables to gold payables, then that eliminates that risk. Sure, the price of gold is down, the value of the gold coming in is down, but then so is the value of the payable going out. And so with that matched revenue to expense, liability to asset, you eliminate that risk. And I think that's pretty important. Mm-hmm. But then number two, I think is the really big one, but underappreciated at the moment. And that is what I call get out of debt at a discount. Now, there's no magic free money machine. Some politicians have asked me, have made that assumption. There's no magic free money here. But what I propose is a market for exchanging dollar-denominated debt for gold-denominated debt. So when the state issues a gold bond, it obviously auctions it off. That's how bonds are sold. And I propose that bond not be auctioned for dollars. The state isn't trying to raise dollars. If it wants to raise dollars, it should sell a regular dollar bond. Uh-huh. The state should not auction it for gold. The state isn't trying to raise gold. It has a gold income of 8 tons coming in from the gold miners. Uh-huh. The state should say, if you want to buy this bond, bring in and redeem existing Nevada paper, and we'll exchange it for this new gold bond. Mm. And so that creates an exchange rate between the dollar bond and the gold bond. And so let me put some numbers to this to make this hopefully really simple. Let's say they sell a 1,000-ounce gold bond. And so its gold price is $1,250, then that's about $1.25 million worth of gold at today's price. I would expect in the first auction that the market will bring in $1.25 million worth of Nevada paper bonds to trade for the 1,000-ounce gold bond. Mm-hmm. However, market's not stupid. I think they're going to figure something out. And that is, this is not gold to be paid today, or dollars to be paid today. Uh-huh. This is gold or dollars to be paid in a 10 or 20-year time frame, which this is a bond. And so, take your pick. Either the dollar is going down in value or gold is going up in value. But either way, the exchange rate that one would expect for gold to dollars in 10 years' time doesn't look like $1,250.
Right.
And so the market is going to, I believe, bring in Nevada paper at a discount. And so let's say they tender $1.5 million worth of Nevada paper to get the $1.25 million, or to get the 1,000-ounce bond. Mm-hmm. Then that means the market has brought in an additional $250,000 worth of debt that Nevada can retire, and which is a 20% discount. So Nevada has a debt of about $11 billion. If they can retire it at a 20% discount, there's a $2 billion savings to the state.
Wow, that's I could see that's very interesting. And what do you think the chances of this bill being passed are?
It's a tough one because in the state of Nevada, it is utterly dominated by the Democrats. So we've met with some of the Democrats. Some of them appear to be interested, appear to be eager to learn more and understand it. If they go based on the merits, if they think, okay, how can this help the state and the state government, I think they'll go for it because the way I just described it, it's not a Republican or a Democrat thing. It's a thing to improve the finances of the state. If it gets political, if they perceive this as a Republican measure and they want to spoke the wheel of the Republicans and they're angry about Trump or whatever it is, then they certainly have the power to kill it.
As I understand the bill, it would allow miners to pay their taxes in gold or silver. Is that right?
That's right.
Okay.
So today the miners get assessed a tax based on the amount of gold that comes out of the ground. That's fixed in dollars, and then later, after the gold is refined, the miners are selling it and then remitting dollars to the state. So that creates a gold price exposure similar to what any bullion dealer would have. And so that requires the miners to hedge and manage that price exposure. If the miners can simply remit the gold, that takes out the cost and the complexity and the moving parts of that hedging. And so I think there's a net benefit to the miners as well.
That's really interesting. Boy, I hope it takes hold. I just think people could start to understand what an asset-based money is and why it's valuable, why we need to go back to it. With just about 30 seconds left, some of these other states, Utah, Oklahoma, Texas, Arizona, Wyoming, they're not gold or silver producing states for the most part. Well, some of them do a little bit, but would they have similar benefits? I mean, they would be different, I would guess.
So a few of those, Utah and I believe Wyoming, do produce gold.
Yeah, Arizona
so
might too a little bit.
Thing. The other states, so Arizona produces copper, and you could back a gold bond with a copper income.
Yeah,
I just didn't want to push forward in Arizona because it just creates a little extra complexity.
Sure,
People right now have enough to get their arms around with gold to gold without adding copper to the mix.
Okay. All right. Well, we're going to have to leave it go at that. But again, folks, it's monetary-metals.com, monetary-metals.com. Go there, learn about what this company can provide for you if you own gold and want some yield. And as I see it, very safe, a relatively low-risk yield for gold that's just otherwise sitting in a vault. You can get it with monetary-metals.com. Thank you, Keith, for being with us, and we'll look to keep up with the progress you're making with Nevada and other things you're up to in the future. Thank you so much for being with us.
All right, thank you for having me.